At some point in history, money stopped meaning what we think it means. You work for it, you chase it, you save it, you worry about it, yet most of it doesn't physically exist. It isn't printed, it isn't stored in vaults. It isn't backed by anything you can touch. It's typed into existence. Here's the unsettling mystery. If money was once gold, you could hold. When did it turn into digits you can TC? And why did that change everything about power, value, and control? Because the moment money lost its physical anchor, it didn't just change economics. It changed human behavior, governments, inequality, and the future itself. And the most dangerous part? Most people never noticed the moment it happened. Stay with me, because this isn't just the history of money. It's the story of how reality itself became negotiable. Setting the stage when money had weight for most of human history, money was brutally honest. Gold had weight. Silver had scarcity. Copper had limits. Money couldn't be created by decree. It had to be mined, smelted, transported, guarded. This imposed discipline. If a king wanted to spend more, he needed higher taxes, more metal, or public support. If a ruler failed, people knew exactly why. Money acted as a brake on power, and that brake was inconvenient. Origins: why gold ever mattered. Gold didn't become money by accident. It had unique properties: scarcity, durability, divisibility, universality. Gold didn't rot, didn't corrode. It couldn't be copied easily. Most importantly, gold couldn't lie. You either had it or you didn't. For centuries, this restrained governments more effectively than constitutions ever could. But restraint has enemies. The first enemy of gold was not greed, it was scale. The first twist paper as a convenience as trade expanded. Carrying metal became dangerous and inefficient. Goldsmiths offered storage and issued paper receipts. Those receipts represented gold, not promises. At first, this worked perfectly. But then someone noticed something important. Most people never came to claim their gold at the same time. So the goldsmiths did something subtle. They issued more receipts than gold, not maliciously, not illegally, just practically. This was the birth of fractional reserve banking. And with it, the first crack in money's meaning. Money now existed in two layers. Physical metal paper claims the illusion worked as long as trust held. The rise when trust replaced limits over time, governments realized something powerful. If people trusted paper as money, then metal was no longer necessary. Central banks were created to manage this trust. They promised stability, liquidity, crisis prevention in exchange. Governments gained flexible spending, easier war financing debt without immediate pain. Gold was still there, but it was fading into the background. Money was becoming abstract. Cause and effect. Why abstraction always expands power. Here's the key cause and effect relationship most people miss. The more abstract money becomes, the easier it is to create. The easier it is to create, the harder it is to control. Gold imposed natural limits. Paper imposed psychological limits. Digits impose almost none. Every step away from gold increased speed, scale, complexity, and reduced transparency. Accountability consequences. This trade-off wasn't debated publicly. It happened quietly. At the breaking point 1971. The final severing happened in August 1971. U.S. President Richard Nixon announced that the dollar would no longer be convertible into gold. This decision ended the Bretton Woods system. From that moment on, money was no longer anchored to anything physical. Currency became pure policy. Digits replaced metal. This wasn't just a technical change. It was a civilizational shift. For the first time in history, money could be created without limit, without cost, and without public consent. The break was gone. Immediate effects: power without resistance. At first, the change felt invisible. Daily life continued. Paychecks still arrived. Stores still stocked shelves. But beneath the surface, the rules had changed. Governments could now spend without raising taxes, delay consequences, indefinitely transfer costs to the future. Central banks could expand balance sheets, manipulate interest rates, rescue failures. Money stopped measuring value, started managing behavior. The fallout: when money lost its signal, money used to tell the truth. High prices meant scarcity, low prices meant abundance. Interest rates reflected risk. After digits replaced gold, those signals blurred. Prices could rise without shortages. Rates could fall despite risk. Markets could surge without productivity. Money no longer reflected reality. It reshaped it. This is when strange patterns began to emerge. Asset bubbles, permanent debt wage, stagnation, exploding inequality, not by accident, by design. The Cantillon effect: who benefits first? When money is created digitally, it enters the economy unevenly. Those closest to creation benefit first. Banks, financial institutions, governments, asset holders. By the time money reaches workers, prices have already risen, assets are already inflated, purchasing power has declined. This is called the Cantillon effect. It explains why. Stock markets boom, housing becomes unaffordable, wages lag behind inflation, money didn't disappear, it moved upward. Failed fixes. Why nothing restores meaning after each crisis. Solutions are proposed. New regulations, better oversight, smarter policy, but none address the core issue. The problem isn't mismanagement, it's structure. As long as money is unlimited and abstract, debt will grow, crises will repeat, inequality will widen. You cannot restore meaning to money while removing its limits. Modern parallels: digits dominate everything. Look at today's world. Over 90% of money exists only as digits. Trillions created with keystrokes. Entire markets moved by algorithms. Money now moves faster than understanding. New layers are added. Digital wallets, central bank digital currencies, programmable money, automated compliance. Convenient? Yes. Neutral? No. When money becomes code, it becomes conditional. The deeper consequence: behavioral control. This is where the story becomes uncomfortable. Gold didn't care who you were. Digits do. Digital money can be frozen, tracked, restricted, programmed. This isn't speculation. It's infrastructure. The same abstraction that removed limits also removed anonymity and independence. Money didn't just lose meaning, it gained instructions. The repeating pattern through history: every time money becomes detached from reality, spending explodes, debt accumulates, trust erodes. Collapse follows. This happened in ancient Rome, revolutionary France, Weimar Germany, countless empires. The tools change. The logic doesn't. Unlimited money always promises freedom. It always delivers dependency. Why people accept it? Here's the most surprising part. People don't resist meaningless money. They adapt, because abstraction feels easier than discipline. Digits feel safer than metal. Promises feel better than limits. Convenience feels better than responsibility, until the cost becomes unavoidable. The moment money lost its meaning when it stopped representing value and started representing policy, when it stopped measuring reality and started shaping it. Gold didn't disappear because it failed. It disappeared because it worked too well. 3 clear takeaways. 1. Money is a system of constraints. Remove limits, and behavior breaks. Abstraction always shifts power upward. Those closest to creation benefit most. 3. Meaningless money creates meaningless signals. Prices, wages, and markets stop telling the truth. Final warning, an open question: every system eventually faces a choice. Re-anchor to reality or double down on abstraction. History shows which path is easier. The question is not whether money lost its meaning. The question is what replaces meaning when digits become law. Call to action: if this video changed how you see money, share it. Subscribe for deep, serious explorations of money, power, and hidden systems. And comment below: can a society remain free when its money has no limits and no meaning? Because once you understand when money changed, you start to see everything else differently.